Hey everyone, I hope you're well. This is CoinsKid. Right now there is a competition on BitGet. Okay, it's a huge competition. It's called KCGI. If you come and join the CoinsKid crew, you'll get a little bonus right there. Okay, so the link is in each and every single video description. It's the 2023 KCGI. Come and join us and get involved, okay? And hopefully we smash this competition. We do tend to do quite well, you know, but the more numbers we're getting, the more we increase our probabilities of winning this thing, okay? And then we've got a massive pot of money that gets shared between us. So click the link in the video description, get involved, and take advantage of this nice little sign-up bonus for the CoinsKid crew, okay? Let's dive into the video right now. So diving into Bitcoin, and at the moment this chart is inversely correlated to Bitcoin for the moment anyway, but what we're looking at right now is a bit of a tightening range into key resistance. So this actual chart has met all the targets, hasn't it? We've got the bear trap down there in July, look at when we bottomed, okay, and the RSI as well. And then what we've done, we've ramped up, and ever since we hit this peak here, do you see this peak, which is roughly round about there, isn't it? We've been creating these higher highs and then this lower highs, or sort of just level highs in the RSI. So this is actually some kind of bearish divergence, okay, and it's getting really tight. So obviously the bearish divergence can be validated by breaking out, taking out its resistance, and then, you know, starting to come back up, and then this breaks out as well. Absolutely possible, and I've seen it a million times. This is why I do think there is a bit of a trade in front of us if you pay attention to this chart, okay? So what we've got here is a really tight range, and then what we've got here is a really tight range in the RSI. So I think what we've got is some kind of move this week, to be honest with you, possibly within days, because of how tight this range is getting. So you've got really compressed in here, and then this has got really compressed up there, okay? So currently you've got the 10 EMA forcing you up into this key resistance, creating this bearish divergence into the support, the resistance, sorry, of that point of contact. So like I said to you, when this broke out down here, you know, I would expect just kick back, relax, okay, just chill out, because wait for this to hit this resistance and see what happens, okay, because this is a technical target for the DXY. So originally we ran into this point of resistance just there, which is the first point of contact. We've had the retracement into this neckline to confirm. So we're getting this breakout, this potential falling wedge right now for the DXY. First point of contact met, fallback support confirmed. Breaking out, second point of contact met, and right now in theory, because we've met that level of resistance just like we did on this break, we should effectively coming back to confirm as support. It really is that simple. So for me, the probabilities of a long position here on Bitcoin are increasing because of what I'm seeing in the DXY. But remember, nothing I say is financial advice. We do have the DXY run into key resistance and Bitcoin retracing to key support, which is that low that it put in 2 Mondays ago. So again, if this does break this resistance, okay, on the daily, starts to come up, then I would expect Bitcoin to have a deeper retracement than we anticipate. And the trade right there is to go short on Bitcoin. Really simple, okay? But what we're looking for equally in the RSI is to take out that resistance, which is what it keeps running into before getting rejected and rolling, okay? So there's definitely some kind of compression going on there, as there is in the index as well. Look at that. So you're really tight. There's something going to give, potentially by the time I put the video out, or if not, over the next couple of days. This will give us a direction here, and this is a trade opportunity, because obviously, as you're fully aware, if this breaks out, we've got to go short on Bitcoin, and if this breaks down, this is just adding confidence to the fact that we need to go long on Bitcoin, okay? So, you know, I'll keep an eye on this chart for you. Now, one chart we definitely want to pay attention to any sort of, you know, macro bullishness for Bitcoin, aside from the Bitcoin chart, is the S&P 500. Let's dive into that chart right now and show you what I'm looking at, okay? Looking at S&P 500, like I said to you a few weeks ago, I think we've got some kind of ABC kicking in here, and right now we have, okay, so I think we're coming back down, and the nominal level of support that I'm looking for is this yellow line. Does it get there? I think that's on everybody's radar, to be honest with you, but, you know, I've got a little breakout here off the 20 and the 55 golden cross, ran into this key resistance, which is this neckline, okay? Look at that neckline, ran into that once more, and right now we're coming back in a potential ABC correction. So until we start to lose a key level of support just there, I have to remain cautiously bullish on this chart. The fact is, you've got some kind of zigzag here, corrective wave back down to the previous swing high. So you've made a high, come back down in a swing low, and right now you're looking to make a new high here for this particular chart, okay? So obviously, if this is right, my analysis on this is correct, that, you know, you found your low just there, you've got an impulsive wave 1, corrective wave 2, this has been impulsive wave 3, and right now you've got corrective wave 4, which you're going through, then in theory, if this low holds and it doesn't lose this key support, the next wave up here is going to be extremely powerful. But obviously what we want to see with that is the DXY rolling. If we start to see pretty much what it did from the end of last year leading into this year, if we do start to see it rolling, it could pave way to this massive blow off top theory that I've got for this particular chart. You know, this sort of ending fifth wave here that's made of subsets of waves within a larger fifth wave, basically, which is usually what you see at the end of a bull run, basically. So what we've got, possible impulsive wave 1, you've got your corrective waves, and then you're coming up like this, and then you've got more corrective waves there until you've not. So one thing that will invalidate this right now is the fact that that could be a 1, that could be a 2, and this will be a free. So this free here, if it is a free, okay, of a massive move to the downside, it will fall through a key level of support, which will give the game away. That, you know, risk is looking pretty nasty, to be honest with you, and we could see some kind of stock market crash and crash of Bitcoin or whatever. You know, is this wave one high? So we need to pay attention to this. This is currently at 0.5 fib at 4102. If you start to see the S&P 500 losing that as support, then yeah, okay, all right, well, our analysis change. You're no longer holding a structure of an impulsive wave 1, corrective wave 2, impulsive wave 3, corrective wave 4. You know, you're breaking down, you're breaking the rules of Elliott wave, and this move to the downside could absolutely go anywhere. But one thing that I'm sort of leaning to right now is the fact that that is corrective. Okay, like I've said to you, zigzags are usually corrective. So, you know, you've got a corrective wave there as well after a move up, and right now you're moving up again, and you've got another corrective wave here. So until you break down, you know, this is looking for continuation of an uptrend, just like it was here. You got your uptrend, correction. So until we start to break down and lose structure, you know, and start to do something like this, you know, at the minute this is correcting. It really is that simple. So we have to respect that, you know. So at the minute, like I said to you on the DXY, we've got some kind of rising channel which is correcting as well, you know. So again, nothing I say is financial advice, but the key support for any bullish momentum on this chart for me, the S&P 500, and obviously that's correlated to Bitcoin and risk, is the wave one high that we put in. I think it was November, wasn't it? And you know, this is my bull market support for you right now. So this particular chart can actually retrace all the way down. Everyone gets squeaky bum to, oh no, going to zero. But as long as you hold 4102, this could have found support, come back up, and then what you're doing, you've got your monster left shoulder, your head, your big right shoulder, your break resistance. See you later. Massive monumental move here, possibly to the 1618 for this particular chart. Okay, so you know, it's all about support resistance. Like I've always said to you, there's always a possibility of anything, but right now, you know, you have to respect the data. You have to respect the fact that this is simply retracing until it's not. Let's dive into the Bitcoin chart right now. Looking at Bitcoin on the hourly time frame at the moment, we are really oversold down here in the RSI. Look at that, equal levels to where we were a few weeks ago on that bottom just there. Now if you take a look, I remember this bottom down here, we've got the 5 waves down with a piercing of that low, and what we did do here, if you take a look, was the bullish divergence. Okay, so when the candle body's on the hour, we've got the 5 waves down. I think we counted this, didn't we? You got your 1, your 2, your 3, your 4 and your 5. So you come down in 5 waves just there. Okay, and the macro 5 waves as well. You got the 1, the 2, the big 3, the 4 and the 5. So there was a lot of confluence at that level that was just an opportunity to go long. And now I remember I was away on the Monday. I didn't actually look at this opportunity, but if I was looking at all this, I would have been building long positions with my stop on the swing low and looking to ride it back up. Okay, and I think on the way back up, is it did start to come back up. I think the next day, obviously I made a video for you and I said we're looking for 5 waves, and we've got the 1, the 2, the 3, the 4, the 5, and I gave you the leg of resistance that I expected Bitcoin to come back into. So down here, if we was looking at this particular trade, this would have been my minimal move off this low here. Okay, would have been looking at that level, which was 2.21%, but primarily looking at that level there because that's that God candle back test. See that? So effectively, descending triangle led into a correction basically, and you're looking at 4.68% gain with a minimal risk trade on the bullish divergence on the hourly. So if we zoom to this particular level where we are right now, very similar at the moment. If you take a look, there's some kind of structure just there. You see this low's been lost, and right now you've got a bullish divergence once more. So again, you know, it's entirely up to you. You'll be a little bit patient, wait for the break here, because this will be some kind of falling wedge on the hourly time frame, some kind of little falling channel, that if you do start to take out this resistance and get a close above a 10 EMA, I would actually be looking to load up some longs on Bybit or Bitget. It's entirely up to you, you know, with a very minimal risk opportunity right here, because if you do start to come up from this point, okay, you could come up into this leg of support that you've lost, and then this leg of support, which is around about 3.51% long opportunity. So a very minimal risk trade. Okay, so what I would tend to do here, and nothing I say is financial advice, is just wait. Okay, please be patient, wait for any close above a 10 EMA on the hourly time frame, and at that point, you know, you're getting a confirmed little breakout here, because what you're getting here is bullish divergence on the hourly time frame. And you know, divergences are really important. So you've got some kind of falling channel like this. If you start to come up above a 10, I think it increases the probability of a run back towards this support that you've melted through, and I think we could get as high as 26950. So again, please be patient. There's a potential scenario that it's done it by the time I put the video out. So if it does start to get close above a 10 EMA on the hourly time frame, I think it increases the probability of a long opportunity. 26142 for Bitcoin. Now, why am I leading down this path as well? Obviously, we're really oversold, sorry, as we were down there. And equally, what we do have here is 5 waves. Okay, so if you take a look, you got some kind of 1, some kind of 2, some kind of 3, some kind of 4, and a 5. So this is increasing the probability of a reversal back up into this resistance right now when people are getting really, really bearish and piling on shorts at support. You understand? So just be patient, come to your charts, wait for a close above a 10 EMA. That level currently is 26146. I think the increase the probability of wherever you are at the time, okay, to go long with your stop loss on the swing low and ride it up, and I'll be looking for at least that 26950, and it could just be part of this larger ABC correction that crypto markets, especially Bitcoin, is going to. Now, one thing you've got to respect here for Bitcoin, like I said to you, bottoms are nasty. Okay, so the possibility that was your bottom a couple of weeks ago on the Monday. So, you know, respectively, what we're doing right now is simply retracing to it. So you can't get too bearish and look for lower lows until obviously you sweep that low. But what you're doing, you're retracing through the fibs here. So at the moment, you ain't even found support on the 0.5 fibs. So the next level of support, if we was to drop here, again, this is why I'm saying to be patient, is the golden ratio at 25871. If it does drop again, then that really is really oversold, potentially a larger bullish divergence, and that could be a little sweet spot to just be patient. Again, wait for the 10 to close above the 10 EMA on the hourly, and that will increase the probabilities again of a run towards that level of resistance. Okay, so obviously the greater your trace, the greater the impulsive pace and all that, but you know, if it was to come down to the golden ratio right now at 25871, you know, and you start to see a little reversal pattern, you could be looking at a lovely little long around about 4.16%. So you know, the 5-wave counter is reading true at the moment, but just because we're oversold down there doesn't guarantee that it is a fantastic long opportunity. What I like to do is wait for structure, okay, obviously the bullish divergence as well, but wait for the structure, wait for the pattern in the charts, and wait for the confirmation of closing above key resistance. You can clearly see at the moment the 10 EMA, if you get your ass above that, that will increase the probabilities of some kind of reversal down here, some kind of little ascending triangle, and then a potential reversal and a retracement into the key levels of resistance, which is that 26950. Take profit on any longs at that point. Okay, so that's basically Bitcoin. You can go long, you can go short, but I always look for the 5-wave counter. We have a lot of success with that particular trade, so I would definitely be looking to keep an eye on this, get a close above a 10 EMA on the hourly time frame. I'm going to build a long position, and I will be taking profit at 26950 for Bitcoin. Hope you enjoyed that update, but please remember, there's your key low, the 1 fib at 24913. It might be different on any exchange that you use, so get that. That is my macro stop loss right now, okay, and right now that's your key resistance. Take that out. Super bullish statement from Bitcoin. Lose that. Super bearish statement from Bitcoin. If you lose this low, where are you going to go to? Okay, so this is something else I've got to show you. I think everybody is targeting this. It's this yellow line, okay, roughly the 22k mark, which is basically a macro ascending level support showing a weekly time frame. This macro ascending level support, which everybody is expecting Bitcoin to get back down to. Okay, absolutely possible, but I think if we do start to do that, it could be really squeaky bum time. You know, we could be looking at a major move to the downside here for Bitcoin if it fails to hold this structural support that we're going through. Okay, so you understand that update. Stay healthy, stay strong, stay tuned. Take care everyone. Back to another update on Bitcoin. Bye bye.